Hello, good evening, everyone. Good to see every one of you here once again. My name is Alex from MarketWise Asia. Today it is, as usual, a Friday evening, 15th of July 2022. The time now is 11:31 in the evening. All right, so once again, good evening, everyone. If you guys can hear me loud and clear, please say a hi to me in the comments. I'm friendly, I won't bite. Okay, give me a like and share. I appreciate that very much. Okay, so this is also to tell Facebook and also on YouTube that you want to see more of MarketWise Asia content in the future, because if you don't do that, and the algo will pick up the things that they think that you're not interested, and along the way they'll start showing you lesser and lesser of MarketWise Asia content on your Facebook or on your YouTube page already. Okay, give me a like, share, or comments. Okay, do engage with me. I'm very friendly. Okay, let me take a look at the comments. Okay, hello, Gilbert, Emmanuel, SP, Mary, ZJ, Lamsu, Susila, Mark, alright, Han Hock, Julie, Alvin, Kok Leong, Imran, HJ, Pei Wen. Okay, thank you so much for being here and being on time today. I think right now we are still early as in not the time it is early, but as in just starting only. So I think there'll be more people who will be streaming in. All right, so let me go through this first. Let me share my screen first, okay, before I kickstart this session. All right, just want to let you know that the Nasdaq Trading Festival, it is coming soon, next week. In fact, next weekend, next Saturday and Sunday, 23rd and 24th of July. I believe a lot of people here have already registered for this event already. We have already thousands of people already registered for this event. Okay, so if you are new to MarketWise Asia, if you're new to Nasdaq Trading Festival, okay, I'll share with you the link in the comments. So do register for this awesome event, proudly supported, of course, by Nasdaq. Okay, I'll share the link in the comments over here. Or you can walk through the things over here. You can see through yourself. Okay, you can participate in our lucky draw. A lot of fantastic prizes to be won. Very simple, nothing to buy, nothing. Okay, you just have to register for this event, and you stand a chance to win a staycation. A Art of Explosive Profits by one of the speakers, Jay Tun. Okay, that's worth 697. Staycation is worth about 700 plus, and also a limited edition MarketWise Asian Net Flash Pay card. All right, it is over here. It's pretty loaded with $50, and also get to access to this US stock sectors cheat sheet plus the bonus video. And you can see a lot of speakers and of course content to share with you. Okay, the market outlook, the market insights, whether market is going to be bullish, bearish, moving forward into the second half of 2022. And of course, the keynote speaker, it is Larry William. And just to let you know, all right, our program, it is already out already. Let me share with you. Okay, so if you have registered for this event already, okay, do give me a shout out. Just type me in the comments so that we know that you have already registered. Let people know that you've already registered for this event. Don't be shy, just engage with me. Just type me in the comment if you have already registered for this Nasdaq Trading Festival, while I go through with you the program, just a very short one over here. So the program, a lot of content over here. All right, so some of these are quite a number of them are pretty new speakers, like Patrick from Nasdaq, Jessica Inskip. Let me zoom in. All right, Jessica Inskip, and also Tony Chang from Options Play over here. All right, so Jessica, all right, we're sharing with you this covered call writing, and of course Jay, our resident speaker. All right, bull or bear market, how to position yourself for this next big move in the market. Binnie Ong, I invited her last event. This time I'm not going to invite her again because some of the things that I'm sharing with you, like VIX, okay, the VIX of VIX, okay, and also some of these wash and rinse, trigger, I learned from her as well. So I really respect her also, right? She'll share with you the only tool you need to spot big move in stocks and any instrument. Ka Yong, all right, the 2 effective technical patterns to profit from the FX market in this volatile market condition. Royston is a new speaker over here, right? The founder of New Academy of Finance. He'll be sharing with you the hack to finding winning stocks that can withstand the test of time. And on Sunday, of course, we have Larry William, title to be confirmed yet, okay? And Caden Chang, options deep dive into the dark and bright side of options. Tony Chang, right, understanding and trading index option. Gavin Chia from Mumu, Singapore, not yet title, okay, but coming out real soon. And also Chris Long, okay, how to thrive in a crypto bear market with an all-weather strategy. Okay, this sounds very interesting to me. So you can see here, a very interesting topic and content. Do register for this event. For those who just joined over here, right, I will share with you the link in the comments once again over here. I'll post it in the link over here. All right, so let me go through this right now. Okay, let's get started for this session. As usual, disclaimer first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. So Alex is always wrong, so please don't copy me, okay? My opinion doesn't mean that I'm right, so please do your own due diligence. Also, as I mentioned, right, the Nasdaq Trading Festival, I've already shared the link with you. If you can see the scrolling bar at the bottom, you can see the link over here. If you can't see the link somehow on YouTube or Facebook, just see it on the screen. Okay, just go to this link over here, marketwiseasia.com/NTF2022. So I can see quite a number of you already registered for this event. All right. So yeah, so for those who just joined me, give me a like, share, or comment. At least give me a like, okay? Liking is free, doesn't cost you money, okay? All right, so today I'll go through with you, of course, the CPI data. Something has changed in the market already. And in fact, today market is actually quite bullish. So what is the market actually doing now? So the S&P is up 1.79%. Dow is actually up 2%. Nasdaq is up 1.55%. So as I mentioned, right? So something has changed over here. All right, so I'll go through with you all this later. Of course, the biggest news, I think on Wednesday, it is on the inflation, right? Inflation hit 9.1%. So a lot of people are freaking out. So it's getting higher and higher, 9%. Will it be 10% the next month or so? All right. So previously last month, it is 8.6%. Okay, so I'll just show you this news. It is already old news. Like you should already know by now. All right, so inflation rose 9.1% in June, even more than expected as consumer pressures intensified. Okay, but just to let you know, the CPI data, this inflation data, is actually lagging. You should know right now it is actually July already, mid-July already, but this is only for June. So this is for June. Okay, so let me go through with you what I mentioned on my Telegram channel over here. Okay, so this is the Telegram channel. By the way, we have about 5,002 subscribers in our Telegram channel. Sometimes I share with you my insights and difference of my comments in the Telegram channel, which I normally do. Sometimes I don't share on Facebook and such on YouTube. So do subscribe to our Telegram channel. This is the fastest way to get the latest ideas, commentary and such. So for our Telegram channel, let me post a link in the comments over here. All right, so very simple, just search for MarketWise Asia, you'll be able to find us lah. All right, so I'll post a link in the comments. Okay, so yeah, so let me go through the Telegram channel over here. Yeah, so what did I mention that day on the CPI data? So I mentioned this, I think you guys can see, right? So inflation hit 9.1, okay? As I mentioned, CPI is actually a lagging indicator, but to let you know, okay, the commodity prices only just started to drop in early June. I think about 10th of June, okay? It'll take some time for the effect of these lower commodity prices to trickle down and reflect into the CPI data. So, I expect next month CPI data to be dropping and such, okay? But of course, don't expect the inflation to drop like 1%, 2%, that kind. I mean, still stay elevated, okay? But I don't think it will go above 9.1% next month. That is on the 10th of August. So I will share with you more. Okay, so after this CPI data is actually out, right? So there are, news saying that, there's a rate hike probability of 100 basis points on the 23rd of July. That's coming up real soon, okay? Just before the Nasdaq trading festival, okay? 100 basis points, that's 1%, okay? So I think the Bank of Canada has already raised 100 basis point, 1% already, right? So, I mean, people are expecting that, the Fed, okay, the US Fed might raise 1% as well. So there is this side which I mentioned also previously, I think for the past, 2 weeks, all right, this interest rate probability, all right, the rate hike probability. Let me share with you the link over here. Okay, so this is the site over here. I'll post the link in the comments. So as mentioned, right, the countdown to FOMC rate hike, okay, 27 of, it's 27 of July, okay. The CPI data is 10 of August. This is 27 of July. All right, so based on previously, right, what I mentioned over here, okay, after this, right, there was a probability that, the rate hike is going to be 100 basis point. But right now, the 100 basis point, probability is only has dropped to about 30%. Okay, now it's 29.7% only. Okay, so right now the target rate is about 1.75%. So by 27 of August, okay, so the probability of doing a 75 basis point, okay, all right, is 70%, okay. So this is as of now. So the probability is actually based on the Fed fund rates future, okay, not important, okay, but generally this is what the market is pricing in, that there's a 70% chance that by the 27th of July, okay, there's a high chance, that 75% chance that the Fed will raise to 75% basis point, okay, the 100 basis point, 30%. Hey, by the way, talking about this, okay, the interest rate, the inflation rate and all this. Recently, I just watched Adam Khoo's video. So the most recent one, okay, I'm not going to show you here, but very similar to what I want to share. So basically, you can just watch this video, okay, almost the same as what I want to share. It's just a coincidence, okay, I didn't copy, okay. I'm going to share with you, that which I already mentioned last week also, but to add in more details, okay, I talk about the break-even inflation rate, okay, the commodity prices has actually already dropped for quite a few weeks already, so that should reflect into the CPI data, as I mentioned, in the next data that's going to come out on the 10th of August. All right, so as I mentioned, right, DBC is a lagging indicator. So refer to the chart, okay, to DBC versus the inflation rate, okay. So later I'll go through the market. Right now I will still go through this inflation. Why I think, okay, next month onward, the inflation rate will go down, okay. Still staying high, but not higher than 9.11%, which I think that the market is forward-looking, which the commodities has already dropped already. So which I mentioned last week already. So DBC is the commodity ETF. It is a broad-based commodity ETF basket. So I think about 60+%, it is based on the energy like heating oil, natural gas, crude oil, etc. So as I mentioned, right, so commodities has dropped at the start of June. So this is 10 July. Sorry, 10 June. Okay. So this is on the 10 June. All right, 10 June. Okay, it's coming down already. So Deep Rate say, yes, I watched that video. I was like, I shared that too. Yeah, almost similar, right? The content very similar to what I've shared, right? So yeah, I mean that I didn't copy him, he didn't copy me. I don't think so, because I don't know him personally also, but I respect him. So it's one of the guru that I always watch. Okay, I like his commentary and views as well. Okay, yeah. So just my personal opinion on Adam. Okay, so yeah, 10th of June just started to fall, and it's still falling. Of course, recently there's some rebound over here. So what I want to do is a naked chart over here, right? Just want to share with you. All right, so I'm going to add in the inflation rate. Okay, inflation rate. So I'm using this broad-based ETF commodity as a proxy. All right, so I in the inflation rate, can just add over here the compare or add symbol over here. All right, inflation rate. INFLA. Okay, so the ticker symbol is USIRYY. Okay, so it didn't reflect the most current one at the 9.1%. So the previous one is 8.6%. That's showing somewhere around here 8.6%. I think you guys can see 8.6% over here. All right, so I just want you to take note on this. Okay, can you see that generally, actually I mentioned last week also, it actually, you know, forward in tandem with the inflation, right? Commodity rises, you know, coming down. Okay, the inflation rate, the brown line will also come down. Inflation rate goes up. Sorry, the commodity prices going up. The inflation rate also will go up. What I want you to share with you, it is the lag time. Okay, that lag time, LAG, the lag time. All right. So, of course, for the past 1 year, not for the past 1 year, yeah, for the past since the start of the year, price has been going up. But like for example, over here, you just go through to over here. Okay, I hope you guys can see. Let me try to zoom in over here. Can you see that? You know, at this point in time over here in 2019, okay, the commodity prices actually start to go down. Right? So at the peak of the commodity prices is actually 6th of June. 6th of June. Okay, can you see that 6th of June over here or 6th of January? Sorry, 6th of January. My bad. Okay, 6th of January over here, 6th of Jan. All right, and then subsequently the inflation rate hit a peak also, right? So that is about 30th, 3rd of Feb. Okay, 3rd of Feb. 3rd of Feb. All right, that is almost 1 month. About there, okay. No need to be so precise. They're about, okay. So there's a, can you see that this two vertical line? There's a lag time over here. All right, so can see over here that there's a lag time. You see, there's a lag time over here. That can you see over here, right? In 2018, okay, the commodity prices kind of hitting a peak over here also. All right, there's also a lag time. There's a lag time also. So if you move back in time, you see commodity kind of peaking also somewhere around here. All right, and then there's a lag time also. Okay, you start to drop a little bit more. So the lag time I want to share with you is that it's about 1 month. So you, as I mentioned before, you need time for it to trickle down, not instantaneously. So for the most current one, the commodity price only started to drop on the 10th of June. Okay, over here, starting to drop only at the 10th of June over here. So if we give it 1 month time, okay, 1 month time, that is about next month, that is 10th of July lah. So by then, okay, the CPI data will be out again. That's on 10th of August, which will be reflecting for the month of July. So by then, okay, next month, 10th of August, reporting the July CPI inflation data. So I expect, okay, I expect the inflation data, CPI data to come down. So do you guys get what I'm trying to say? So there is some lag time. So based on what I can see from the broad-based DBC ETF chart and the inflation rate, the lag time, it is about 1 month, about 1 month. So if you understand what I'm trying to say about this lag time, just type lag in the comment. Or take a sip of water. Okay. So I repeat, I don't expect commodities, I mean the inflation to drop to 1 to 2%, but still elevated, okay, maybe 4, 5%, 6%, that kind, but won't be higher than 9.1%, okay, won't be higher than 9.1%, right? So do engage with me. You can understand what I'm trying to say. Just type lag in the comment about this one, what I mentioned in this lag time, LAG over here. And I also mentioned about the break-even inflation rate, right? So this is the one that I mentioned about last last week. Okay, so for those who are new to here, who are new to MarketWise Asia, for those who are new to Alex, okay, so this was the chart that I mentioned over here. This is the 5-year break-even inflation rate, which Adam also mentioned as well. So there are 5 years, there are 10 years, okay, but I think 5 years is good enough. So as I mentioned, what does this 5-year inflation break-even inflation rate mean? Right. In layman terms, it's just that the expectation, the expected inflation, the latest value implies what the market participant expect inflation to be in the next 5 years on average. Basically, this is like the consensus. So this is more of a forward-looking indicator as well, the expected inflation. So the expected inflation is T5YIE. So you can add in also. All right. So T5Y. Okay, this is the 5-year break-even inflation rate over here. Okay, so you can see that typically it also follow the inflation rate, and in fact it lead the inflation rate. And so can you see over here, right? This is the blue line, is the break-even inflation rate. So starting to rise already, and then the inflation rate start to rise or follow. So right now the break-even inflation rate is starting to fall. So moving forward, I expect the CPR and the inflation rate to fall as well. So this is what I have already mentioned already. So clear on that. Okay, so moving forward, I won't be talking about inflation already. So basically, I expect the next reading in 10th of August, the inflation rate to be lower than 9.1%. If that is so, okay, that will be bullish for the stock market. All right. And then, of course, we're talking about the recession, right? Recession, right? So last week, I also mentioned about this, the recession probability. Okay, if you are new to here, maybe you can listen to last week live on YouTube, on Facebook. Okay, I won't go through that again. But generally, okay, what the market is very worried about the recession. Okay, so nobody knows what's going to happen. Of course, there are some indication that there could be a recession soon. Okay, one of them is the 10-year versus the 2-year yield, and a lot of things. Okay, you go and watch the news, read the news. The economists are factoring about the recession. There's a high chance and such. Okay, but I will still stick to this New York Federal Reserve, Bank of New York Federal Reserve. Okay, so this is the link that I mentioned. It is once again updated. All right, so I'll post the link in the comments. Okay, so last week I mentioned this week the same thing, but okay, this is the updated one on the 11th of July. So this is basically the 10-year versus the 3-month bonds. All right. So normally inverted, although it shows there's some sign of danger. Okay. So right now for the 10-year versus the 3-month, still haven't inverted yet. Okay. But 10 years, 2 years inverted already. All right. But right now, the probability, okay, until the next year, all right, 2023, the probability of a US recession has increased to about 6% chance. I think previously it was about 4.9%. So higher risk of inflation, not high risk of recession, but based on what this Bank of New York Federal Reserve are looking at, the probability of recession, it is still low right now. Okay. And of course, my thinking, hey, a lot of economists out there are predicting about, there's a 40% chance of a recession or that kind of, okay. But what I want to share with you is that, there's another indicator that I'm looking at, this indication, it is based on the unemployment rate. So what the unemployment rate so far, it is still low at 3.6%. Is it 3.6%? Yeah. So good news is that the unemployment rate so far, it is still low. Okay. So based on the Fed data over here, this is the unemployment rate. I'll post the link in the comments. All right. So what I'm worried is that when there's really people lost their jobs, people have no jobs. No jobs meaning they have no money to spend. No money to spend means the company aren't making money. Company not making money. Okay, they have to less revenue. They have to cut costs. Cut costs. They have to retrench people. Retrench more people. More people no money. More people no money. Okay, then they'll spend even lesser goods. Okay, spend lesser goods. Then the companies don't have revenue, lesser revenue again. So this loop will continue again and again. So the unemployment is actually quite important. So can you see over here, right? This gray shaded area, it is the recession period. So this timeline span from 1950 to right now, 2022. So every time the unemployment rate starting to rise, starting to surge, right? So you can see over here, right? Like over here, 1950, okay, unemployment rate starting to surge, okay, there's a recession, okay, unemployment starting to surge, start of recession, unemployment go higher, recession, unemployment rate go higher, recession, okay, go higher, recession, unemployment rate, recession, 1990s, okay. All right, then the 2000.com crisis, recession, unemployment surge, okay, 2008, all right, and then the unemployment also starting to surge, okay, recession comes, okay. So 2020, the COVID crash, there is also a kind of surge in the unemployment rate, but this is very fast because this is due to just to the COVID. So right now, what I'm still at peace, okay, is that the unemployment rate right now is still low at 3.6%. Okay, 3.6%. Okay, so I'm looking at this quite closely. So if the unemployment rate is starting to go higher and higher within the next few months or so, then I think that there's a chance that the recession is real. So right now, I think that it is still okay. Okay, don't need to be too worried on this recession thingy as of now, okay, because I still feel that the what do I say, the employment, okay, the not employment, the labor market, okay, the labor market, it is still very tight, okay. People are still having their job, okay. It is still an employee market. Okay? People can choose what job they want to go to. The labor market is still tight, okay. So that is good, all right. And then what else I want to say? Yeah, these are basically the two things that I'm watching out for, okay. All right, so any questions so far for this? Okay, the CPI and the recession. All right, so I think still okay. And of course, the very widespread that people are talking about, it is these 10-year versus the 2-year yield. I think last week also got people ask me about that. All right, this is this chart, T10Y 2Y. You can just put it in your trading view chart. All right, T10Y 2Y. This is the 10 years minus the 2-year yield. Right now has inverted. All right, inverted. It dropped below the 0% line, which means that it has inverted. Okay, the yield curve has inverted already, so it's staying there. Of course, based on past historical data, every time it kind of inverted, there's a recession. Okay, there's a recession. Okay, so yeah, but what I'm going to share with you is that it doesn't come instantly as well. So it takes some time. The lag time once again can take about 6 months to 24 months. Okay, 6 months to 24 months is 6 months to about 2 years. So from now until end of the year, I still think that we won't be having a recession now. Okay, so that's my personal opinion on that. Based on all the things that I shared, unemployment is still low, labor market is still tight. Okay, plus the inverted yield curve, I think there's still a lag time of about 6 months or so. So not to get so worried on that. Okay, so with that, any questions so far? If everything is good, everything is okay, just type good in the comments. All right, so I hope to finish this Facebook Live or YouTube stream in about 1 hour's time. Okay, all right. So I want to just talk about this on the market as well. All right, if everything is good, just type good in the comments. So type good in the comments. So I'll also share with you these strong sectors later, okay, and the seasonal trade. Oh, by the way, right, talking about what I share, a recap of what I share. So in my Telegram channel, I mentioned that, what did I I said. Yeah, so Alex is always wrong. I do get wrong sometimes. So previously I mentioned that, the broad commodity has undergone a sharp correction. The broad commodity is in the support area. We might see a bounce in broad commodities within the next 1 to 2 weeks. So it has proven that I'm wrong this time. I'm wrong. So can you see that that the oil and gas, like the commodities, metals, all this has been dropping so far. Okay, so for example, just use DBC back again, DBC. Okay, commodities, broad commodities. All right, so it went a little bit higher, then dropped down again. So, okay. So for me, previously, I did actually enter a trade into DBA. DBA is actually the agricultural soft grains are basically the wheat, corn, and soy. So, I entered, this is a counter trend trade. So just sharing with you what I did. All right. So I entered on this green bar over here. All right. Price went up a little bit higher. Okay. In decent profit. I think that my risk reward is 1R. Okay, so I risk 100, I get 100. So I didn't take profit. Okay, after that I subsequently shift my stop to the break-even point. Subsequently, price came down. Okay, I just exited. So this is more of a break-even trade. So no loss on that. So but eventually I got it wrong. So the commodities, okay, is still very weak. Okay, even though I expect a bounce, but the bounce is very short-lived. It just bounced for a few days only and then come back down already. So, but this is good for the overall market because the inflation rate should come down. Okay, so this is just what I mentioned. Alex is wrong this time around. Okay, so yeah, talking about this, the market update, right? So actually, for the past 1 week, I am actually secretly bullish on the market indices. Okay, and one of the things that I'm looking at is back to this VVIX over VIX indicator. So how many of you actually saw it, this divergence? All right, if you see this divergence, right, just type divergence, div, or if you are watching this VVIX, you see what I'm seeing. Okay, this divergence, type me in the comments, or type VVIX in the comment, whatever it is. You can type VVIX in the comment or type me in the comment, whatever it is, or type divergence in the comments, whatever it is. Just let me know, because I mentioned this VVIX for a lot of times already. I mentioned for a lot of times already. Okay, I'm watching this closely. This can give me some clues that what the market it is doing. Okay, all right. I can see quite a number of you. All right, like Pauline, Valerie. You see this, right? Okay. So for those who are new to me, all right, VVIX over VIX is actually a market internal that I'm using. VIX, I think you guys should know. Okay, the fear factor, the fear gauge, when market plunge, normally the VIX will surge, right? So the VVIX is actually the volatility of volatility. Okay, I don't want to keep mentioning this. Okay, so not important. Once again, if you are new to me, important thing is that it's a ratio between the VVIX and the VIX. All right, you can treat it at when it is at the top, you can treat it that the market is complacent. When it's at the bottom, the market is fearful, overbought, oversold, something like this. Okay, so at the bottom, right, I'm going to add in the S&P 500. Okay, so add in comparison SPY. I will use the S&P ETF SPY and I put under a new pane over here. All right, so at the top it is the VVIX ratio. At the bottom it is the SPY. Okay, all right. Try to zoom in over here. Aha. All right. So can you see that for the past 1 week or so, especially after the CPI data, it is out. All right, the SPI, no SPI, the SPY, okay, came down, right? This is coming down, right? Wow, the VVIX ratio go higher, okay, go higher. So this tells me a clue that the market, might be bullish okay, at least for the short term within the next 1 to 2 weeks or so. Okay, by the way, I'm not saying that the market has turned into an uptrend. I need to repeat this for many times. I'm not saying that the market has turned into an uptrend. It is still in a downtrend. I'm just saying that within the next 1 to 2 weeks or so, okay, in the short term, we can roughly have some clues where the market is going. Okay, so again, repeat, while the SPY is coming down, the S&P 500 is coming down, the VVIX ratio, it is going up. There's a divergence. So this is actually bullish for the market. Okay, so for the VVIX, right, it is in a low area already. So normally, when it is at a low area, oversold area, it comes to bounce. Okay, it will tend to bounce. You can see over here at a low, tends to bounce at a low over here, tends to bounce at a low over here, right? Tends to bounce as well. So this VVIX ratio, can be used on reading the divergence as well. All right, so this is very useful over here. So previously, I think about 2 or 3 weeks ago, right, I mentioned that I'm skeptical of the market rally. Okay, all right, it is because of that. While the S&P 500, it is going up. Okay, the VVIX ratio is coming down, divergence. Okay, divergence. That's why after that, the market have a correction over here. S&P 500, SPY correction. So right now it's showing a divergence. Okay, so I am bullish at the market for the past within the next 1 week or so. In fact, I already have a position in the market already because I saw this. I placed some trades. Okay, 1 or 2 stock position. Okay, I don't want to mention names. Okay, generally, like right now, the indices, it is heading higher. Okay, Nasdaq is up 1%, 1.2%. S&P is up 1.6%. Nasdaq, Dow is up about 2%. Okay, and I want to share with you, it is this something changed also. It is this. Okay, so back to here regarding the CPI data. So last month, when the CPI data was out on the 10th of June, okay, 10th of June. Let me remove all the things first, okay? Naked chart. Okay, so 10th of June, all right. CPI data out, the inflation data out, okay, it was 8.6%, right? Okay, all right, on the day itself, okay, market just plunged quite a bit. So that day, I think it plunged near 3%, 2.8%, subsequently minus 3.77%, and then dropped all the way, okay, so it dropped quite a fair bit. Okay, CPI 8.6%, market had such a huge reaction. This time around, the CPI data is 9.1%, okay, higher inflation rate, okay, but the market didn't drop a lot. The market, this is, I think, on Wednesday, right? Okay, on Wednesday, it is, on the 13th of July over here. All right, 13th of July is over here, 9.1%. Okay, the market, in fact, didn't drop much. And in fact, heading higher right now. It's heading higher right now. Okay, so what does this tells you? Something has changed. Okay, is it because the market has already priced in, like what I mentioned, that next month, okay, the CPI, will drop. Okay, or the worst is over already. That's why it is not reacting to the bad news anymore. Okay, do you understand what I'm trying to say? So the market is forward looking. It might has already priced in. Something changed. Do you get what I'm trying to say? Something changed. So again, we unsure yet. So, but why I see that this is a positive sign over here. And right now, there are still a lot of retails, guru, still very bearish on the market. Okay, a lot of people are very bearish. Okay, so a lot of time, most of the time, the consensus is wrong one. Okay, of course, the market might not just do a V-shaped recovery. Price can just ping pong for a while and then starting to go higher. Okay, we don't know. Of course, no price can continue to go lower, but as of now, what I'm seeing that something has changed. I keep repeating this, something has changed. Okay, the higher inflation rate data, it is not causing a sell-off anymore. It is not causing a sell-off anymore. It is starting to stagnant and start to reverse a little bit higher. Okay, this might tells me that the forward looking part market has already priced in already. Okay, if I add in my usual indicators over here, all right, okay, for the S&P 500 over here, okay, we are sticking close to the central pivot range. Okay, not coming down. Normally, can you see that previously, right? Okay, like after price has become a downtrend. Okay, for those who are new, just a quick intro over here. The cloud and the CPI is something that I always use to determine the trend and such. Okay, if you don't understand what I'm trying to say, never mind. Just watch me for a few times, you will know. Okay, so let me share with you this link over here. If you want to know how I add all these indicators, just head over to the link in the comments. All right, back to over here. It is in uptrend and then price below the cloud, below the CPI is a downtrend. Every time, kind of hit the CPI, sharp sell off over here. All right, sharp sell off over here, sharp sell off, hit the CPI, okay, sharp sell off. Right now, price didn't react much at the CPR yet, okay? So didn't have a sell off. So this is a good sign as well, okay? So if we are expecting the market to come down, all right, but it didn't come down, okay, there is a probability that the market will do the opposite, that's to go higher. How high? I don't know, okay, but I do expect that there could be some rebound, okay, within the next 1 to 2 weeks or so. If the market continue to stay this way with the VVIX continue to go higher up, all right. So for the Nasdaq, all right, it is almost the same as well, every time there's hit the CPR, price come down, okay? But right now it is still hovering there, not coming down. So this is a good sign as well. For the Dow, all right, it is hovering there as well. So of course, what are the key resistance levels? So again, nothing much has changed. Okay, I think for the past many weeks, I'm still saying that the market, it is still in a downtrend, right? If you're doing some swing trading, you want to go long, go short, it is fine. All right, for position trading or holding for longer term, right now it's still on a downtrend. Don't buy yet. If you are intending to hold for at least more than 6 months or 1 year, don't buy yet. All right, so let's head back to the key resistance level. I will just stick to the S&P 500. All right, stick to S&P 500. Okay, so as I mentioned, for the longest time, okay, 3930 is the key resistance level, also near the central pivot range. So I'm still looking at the 3930 for the S&P 500 futures. So I need to see price to break above the 3930. Then I will be more bullish bias. Right now, I'm secretly bullish lah. Okay, but not so bullish yet. Above 3930, then I'll be more bullish. So right now I see that, okay, I think the sentiment has changed a little bit. Okay, all right. Okay, right. But of course, when price go higher, at like 4,000, 3,009, that kind, then 4,000, then there'll be more resistance level to come now. But right now, I don't predict so far ahead. So 3930 is still the number to clear. All right, 3930, the number to clear. Everything okay? Everything okay? Just type okay in the comment or type in 3930. I've been talking this for the longest time already. All right, longest time already. For the Nasdaq, also the same. There'll be some level that I'm looking at. Okay, at least price go above the CPR lah. So that's the next best thing that I can see to get happen. All right. So for the indices, I think okay, right? 3930 for the S&P 500. I won't be going through the Nasdaq and the Dow. Pretty much similar also. Now about 47 minutes already. All right, so what I'm going to go through with you is that the okay, I go through the VBIX divergence. Okay, so the strong sectors and industry. All right, again, nothing much has changed. Last week, I mentioned about this XBI, the biotech sector, right? So as I mentioned, right, normally, before the indices can turn into an uptrend, the very strong stocks, the very strong sectors, the very strong industry will tend to lead first, okay, before the indices bottom out. So, which means that they will start to go higher up already, okay, while at the point in time, okay, the indices like the S&P, Nasdaq, Dow can still continue to go lower, but those strong stocks, strong sectors, strong industry could already start to go higher already. So what I'm trying to say that this is for example the S&P 500, they continue to go down, right? This is the SPY, they continue to go down, but the stronger stocks or stronger sector then be coming down and start to move higher up already. So to move higher up already, okay? All right, so they will tend to lead. And what I'm seeing that the XBI right now, it is still performing pretty well, all right, right now. So you can see that price break above the cloud, all right, and then hovering there, consolidation. So this is a good sign, hovering at above the cloud support over here. All right, the market, the XBI, the biotech sector has already surged quite a bit, okay? From the low to the bottom, up about 30+% already. So I don't expect price to continue to go higher like that, okay? So consolidation, it is a good sign over here. So no change. My view, biotech, it is still performing pretty well. By the way, I could be wrong. I'm that I have a position in biotech already, okay? But I could be wrong. Price can just go down like this, okay? So please don't copy me, okay? I'm just sharing with you what I'm doing, which I think it could be a strong sector if the market continue to go higher within the next 1 to 2 months or so, that kind of, all right, okay, right, we have still some risk because overall the market, it is still down, okay. What I'm trying to pick is the stronger industry. So I'm still going back to the ETF screen over here, all right. Something has changed also. There are a lot more strong sectors that is emerging right now. So this is the ETF screen. All right, I'll post the link in the comments. So performance tab, short fund choose no, leverage funds choose no. The dollar volume for the past 1 month, I would choose 500K. Okay, and then just update page. I mentioned that last week. Okay, I will go through with you if you are still new to me. All right, so you can see the performance. I'll try to zoom in over here. For the past 1 month is here, right? All right, so can you see that the team is actually, healthcare, biotech, GNOM, right? The brother of ARKK, the ARC Genomic Revolution, also biotech, some biotech. You can see XBI, it is over here for the past 1 month. Return is about 30%. All right, so like the breakthrough, medical breakthrough, okay, biotech, okay. What we have your healthcare services, healthcare. Okay, the health sectors is also strong. Okay, Invesco healthcare is strong. All right, healthcare, technology healthcare, small cap healthcare, pharmaceutical healthcare, China healthcare, US health provider. All right, all these are the strong. Okay, and then we can see something different. This is the ITB, the home construction, also pretty strong for the past 1 month. Generally, you can see all health. So biotech, healthcare, ITB, home construction. Okay, so how do you know all these are strong? All right, remember this cheat sheet that I sent to you guys if you registered for the Nasdaq trading festival over here, right? So this is the one for those who are new to this Facebook Live Nasdaq Trading Festival. You get access to this US stock sectors cheat sheet. So register for this event that's coming up real soon, next week. I'll post a link in the comments. Right. So a lot of these speakers over here and all the programs are all inside here. Do check it out. It is free, proudly supported by Nasdaq. So this is the one you will get these stock sectors cheat sheet over here, right? So July, actually, you can see July, typically it is a strong month. All right. July typically is a strong month. Can you see over here? All right. Healthcare, 80% of the time it is up, but generally a lot of sectors it is also going up lah. But coincide over here, the seasoners is telling you that healthcare is not too bad, not too shabby. All right, and then you take a look at the ETF screener for the past 1 month. Biotech, healthcare, home construction, it is also pretty performing pretty well. So these are the strong sectors that you can look into. Okay. So if the market really turn, I think all this health sector could turn even higher up. All right. So this is just my personal opinion. Okay. So if you know what I'm trying to say, okay, I already shared already. Type health in the comment. Healthcare, health in the comments. So these are the strong sectors that you should be looking at. The industry is the biotech industry. Okay, type health, biotech, healthcare. All right, these are the strong ones that I'm looking at. So for this is the ETF screen. Another one that screen that you can look at, it is the ETF.com. I mentioned that last time also, but I think it has been a while since I talked about ETF.com. Maybe there are new people who are here might not know. So another free screener for you, it is ETF.com. As simple as it can get, ETF. Okay, ETF.com, go to the tools and data over here, screener and database. All right. And then go to the features over here. All right, features. Leverage, no. Inverse, no. Okay, and then go to performance over here. I'll zoom in. You can see clearer over here. For the past 1 month, 3 month, year to date, you can sort it out yourself. For the past 1 month, can you see over here or not? May not be exactly the same like the ETF screen, but almost the same. Can you see or not? Okay, these are the smaller one. What Kelly gene editing technology, also biotech. Okay, BBC biotech, ARKG biotech. XBI. Okay, biotech ETF, cancer, immunotherapy ETF, SBio, and all the same thing now. Okay, biotech, IBB biotech. Okay, biotech. So this is another screener that you can look at also. All right, and okay, I think this is about all that I'm going to share for this screening and the strong sector. And I want to share with you is this seasonal trade idea. All right, so I think Benson actually asked about, I don't know which comment. Is it over here? When can enter XVI and TLT? TLT is the 30 years Treasury Bonds. I don't know why, Benson, you really like to enter into TLT, the Treasury Bonds. Why? Or why always TLT? All right. Anyway, some of the trade ideas that I'm going to share with you. All right. So why healthcare it is strong right now? Okay. It is also based on seasonals right now. Okay. So I think this is the last part I'm going to share with you. All right. Let me take a look. Let me share with you. Wait. Let me find the page over here. Okay. All right. So I do have the one for XLV. XLV is actually the healthcare sector, like healthcare. Okay. But what I have is another healthcare ETF. It is IXJ. IXJ is actually the iShares Global Healthcare ETF. Okay, IXJ. All right. Also health from the 12th of July, all right, until the 28th of July. Okay, for the past 10 years. All right, for the past 10 years. 90% positive. You go up for the past 10 years, 9 years, you went up. So health, all right. And then something interesting is that these SMH and SOXX, or this is the semicon. How do they perform? Let me take a look. SMH. Okay, so yeah, still in line with the tech sectors and also the indices. Okay, not the strongest yet, but just share with you some trade ideas. Okay, for the semicon. Okay, also from the 12th of July until the 28th of July. All right, for the past 14 years for SMH, okay, it is actually 93% of the time it is positive, which means that for the past 14 years, 13 years, it went up in July. Okay, for SMH, this is the semicon ETF. SOX also semicon. There are two big semicon ETF. All right, SMH and SOXX. Okay, so this is just a trade idea. No trigger yet, but I'm looking at them closely as well. Another one, okay, like what Benson mentioned, is actually the Treasury Bonds, 30, 20 plus years Treasury Bonds. All right, this is the bond. This is the bond. All right, so from 13 July to 29 July, for the past 12 years, 92% of the time it is up, which means that of the past 12 years, 11 years it is up. So for TLT, okay, going up is actually good, the Treasury bonds. Okay, so Treasury bonds and the interest rate are inversely correlated. When the bond price is up, all right, the interest rate will go down. So this is also good for the market. So as you can see over here, right, for the past 1 year, for the start of the year, the Treasury bonds has been undergoing a very strong downtrend. But overall, okay, on a weekly time frame, all right, we are in a downtrend now, okay, for the Treasury bonds, okay, which means that the era of low interest rate, okay, will not be here anymore. I mean that moving forward, the interest rate will continue to go higher, but okay, short term wise, I could think that we could be a relief bounce. There's a bounce over here. So right now, the Treasury bonds is suggesting that the interest rate, the yield, okay, might have kind of stabilized or even go down in the future. So it is coming down. It's coming down. The bond price is coming down, starting to go higher. It is right now above the central pivot range also, which means that the downtrend on the daily time frame, it is weakening. So can you see that for the past start of the year, right, it is always below the central pivot range. Okay, CPR. So this is the first time, all right, price is above the central pivot range. The downtrend, it is weakening on the daily time frame. All right, and based on the TLT, as I mentioned, right, 13 July to 29 July until the end of the month, we still have some time. Okay, all right, and then I think we might continue to see a bounce moving until the end of the month. But don't be mistaken, okay? Overall, in the broad context, okay, the bond market is still in a downtrend. Okay, what I'm saying that short-term wise, within the next 1 to 2 weeks, we could see a bounce, and this is in line with the seasonals as well. Okay, Ken. All right, I also have a position. Okay, so this is just to let you know. So I entered somewhere around here, this bar over here, alternately, okay, this bar over here. So right now in some decent profit over here. I think the risk to reward, I think at least 1 R, about 1 R. I think about 1 R. All right. So yeah, okay, and this is what I'm doing, and this is a wash and rinse trigger for those who know. Wash and rinse trigger. This is also taught. This is also taught by Bini. She will be also speaking at the Nasdaq trading festival. So do attend her session as well. You know, I benefit a lot from her based on the VVIX and also the wash and rinse trigger. So, okay, so do register for this event. Once again, I'll post the link in the comment. All right, so TLT can take a look. All right, so short-term wise, seasonals. Okay, another one like the home builders. Home builders, as I mentioned, right? Why is it going up? As I mentioned, it could be due to seasonals as well. All right, and the 26th of July until the 23rd of August. For the past 10 years, 90% of the time, it is actually positive. All right, so as I mentioned, this ETF screen, right? This XHB, is it, where is it? XHB, yeah, over here, home builders, right? So this could be the reason why, seasonals wise, you know, XHB tend to perform well in the month of July to August as well. All right, so yeah, but in the grand scheme of things, I just want to reiterate, okay, we are still in a downtrend. We are still in downtrend, okay? But what I'm seeing that, you know, I see some changes, okay? It could go higher up a little bit. I don't know when, how much more, 1 to 2 weeks time, I don't know. But overall, we are still in a downtrend. If you're doing swing trading, then there's a good opportunity, okay? You're doing swing trading. Can? So let me take a look at the question. Let me take a look at the question. Mortgage rate going up, home construction ETFs still can buy. So Kwang Ming, I'm not holding long term. Okay, I'm just doing swing trade, holding for about 1 to 2 weeks time. You know, I am out already, so it doesn't matter to me. So it can up, like for example, like XHB. Okay, this one, you can see it's pretty strong at XHB. Home builders, you know, now it's above the CPR. All right, so can be, you know, can be just, you know, hit until here, the next resistance level at the R1 level, then I'll be exiting already, that kind. All right, so until then I'll watch and re-enter again. So this is more of a swing trade kind of a perspective. So I don't care whether it's going up within the next 1 year, 2 years. I don't care, because I'm trading short term, maybe 1 to 2 is the kind. So it is fine for me. So I haven't asked a good question. How accurate is this seasonal factors nowadays? This is a bearish neutral year compared to the past decade. This is a valid question. So for the past, you know, I wouldn't say for the past 10 years, okay, I would say at least for the past few years, the market is still in a generally bullish tone and not in a downtrend. Yeah, so in a downtrend, okay, the market, the seasonals might not work so well. But what if you just use this seasonals data as a confirmation? Okay, price action, okay, price action. The price action, like for example, how the price move, it is still number one. Price action, you have still see number one. All right. Seasonals, you can use it as a secondary kind of judgment or decision. If the seasonals also tells you that, you know, hey, you know, health this month is good, health price action is also good, then give you more confidence, give you more conviction to enter, right? So because there are so many stocks, right? So many stocks to trade, energy, financial, utilities, you drill down even more stocks to trade. After the sectors, more stocks. So how do you know which stocks to trade? There are so many triggers, so many entry, right? So I just want to find the best of the best. So for example, if I have a trigger coming from both the industrial and also the healthcare, so I will definitely choose the healthcare right now, because it is the stronger one, and seasonals also telling me that it is pretty strong. Okay, so you get what I'm trying to say? So use it as kind of a conviction, secondary kind of a judgment, but price action still remains number one. All right, Ken? How would you trade XBI? So again, XBI, there are two components. One is for a longer term trade and one is for a short term swing trade. So for a short term swing trade, okay, all right, there is a wash and rinse trigger. Correct or not? I don't know whether you attend Bini's course or not. So there is a wash and rinse trigger over here. So this is the wash bar, and then this is a rinse bar. Although I don't like this hammer candlestick pattern, okay, but I'll still give it a go. Okay, my stop is somewhere around the bottom over here. If price go down lower, then I'm wrong, at least for the short term. Yeah, so I've already entered XBI, still about break-even price, so not much movement yet. So I'm fine with just hold on to it, okay, until it hit my stop. All right, so again, watch and rinse trigger is something that is taught by Vinny from the Nasdaq Trading Festival, one of the speakers as well. So do register for her session. I think it's pretty useful for you. Okay, so I think I shared with you quite a bit already for today. I think just nice about time. I talked about the inflation rate, freaking out, which I explained to you why I think the CPI data will drop next month on the 10th of August. All right. And CPI is a lagging indicator. Recession-wise, unemployment rate is still low. I think it's still okay. Recession might have, might not have, but even we have a recession based on the indicator that we're seeing, like the 10-year minus 2-year yield, okay, I think there's still a lead time, 6 months, 24 months, I don't know. But at least what I'm seeing that unemployment rate is still low at the moment. Labor market, it is still tight. I think that is okay right now, at least for now. And for the market, okay, as I mentioned, right, the VVIX, I am actually secretly bullish, okay. Secretly bullish based on the VVIX, okay, based on the VVIX. Just a recap again. So this is the VVIX. As I mentioned, there is a divergence while the S&P, comes down. The VVIX continue to head higher. So this is something that I like to see moving forward. Okay, all right, and then the strong sectors I've mentioned to you already. All right, so the biotech. Okay, of course, it doesn't mean that moving forward, all this will continue to lead, but at least right now, at this moment in time, I'm looking at the healthcare, biotech, home builders, etc. So at least give you some ideas where to look at, where to find trade ideas and such. All right, and then for the seasonal trade, I talk about the healthcare, the semicon, the bonds, the home builders, etc. All right, so learn smart money concept so you don't get stop out, will ya? So what do you mean by that? Scott Janavici, of course, I know about the placing the stops. Don't place a very obvious stop. I'm not sure what is that what you're trying to mention. If that is so, yes, I understand that. So I do know where to place the stop. Don't get hit so easily. Okay, all right. So yeah, maybe if you have some ideas, do share with me. Do bounce your ideas with me. What's your what you say is very vague, very vague. I mean that, yeah. Do share with us. Okay. So we always have different ways to trade. I'm open to yours. Okay. If you have some ideas, do share with us. Do share with me. Right. So how can we get your seasonality sectors spreadsheet? So as I mentioned over here, this Nasdaq Trading Festival. Okay, so do just register for this event and you'll get this spreadsheet over here. This is the spreadsheet that I shared with you just now, right? Okay, so this is the spreadsheet over here. So do register for this Nasdaq Trading Festival. Okay, so Scott is saying that study smart money concept on YouTube. Okay, sure. All right, I'll go and check it out. Thank you for the comments over here. And I think that's about it for today. So yeah, I mean, there's some of the position that I entered. It is profitable so far. So let's see how it goes within the next 1 to 2 weeks or so. Okay, I'm secretly bullish lah. Okay, for now, at least for the 1 to 2 weeks. Okay, and yeah, but a recap. Before I end, I just want to let you know that overall the market it is still in a downtrend. Okay, overall still in a downtrend. Now, don't say Alex say that he is bullish. Short term wise, I'm still bullish lah. Okay, short term wise, I'm still bullish, but overall we are still in a downtrend. So still be careful. still market hasn't really turned from a downtrend to an uptrend. So do prepare for that. Anytime the market can turn anytime. So right now I'm still more of a swing trade, that kind of short-term trade. All right. So I hope you enjoyed the session today. If you learn something new, like my sharing, do give me a like, share, or comments. Liking is free, doesn't cost you money. And also do register for the upcoming Nasdaq Trading Festival that I share with you. All right. So with that, if you enjoy my content, share with me, type value in the comments so that I know that you enjoy my content, give me some support and such. Also tell Facebook that, I'll go that you want to see more of me in the future. All right. So just type value in the comment if you find it useful before I end this session. So once again, thank you so much. I wish you guys have a good weekend ahead. And, most likely I will see you guys next week for the Nasdaq Trading Festival already. So most likely, I think so, I won't be having a Facebook Live next Friday. And of course, I need to prepare for the event. All right. So thank you so much. And I wish you guys have a good night and a good weekend. Okay. Thank you so much. Okay. Bye-bye.